Continuation of input tax credit, my dear friends. Restriction on utilization of input tax credit, rule number 86 capital A. When the taxpayer misuses the provisions causing to evade the tax by availing input tax credit fraudulently or otherwise, excess credit availing as a refund fraudulently, such a thing has been noticed by the GST department, the commissioner level officer will be going to restrict your credit to the extent of misused input tax credit. For example, Mr. A, being a taxpayer, misused input tax credit, fraudulently caused the loss of revenue, let us say 2 lakh rupees. Notice by department. His credit is also restricted to the extent of 2 lakh rupees. Such a restriction can be imposed and it is valid for a period of 1 year, up to 1 year. That restriction is available in force. Then you have to show your bona fideness, then or you pay your amount what you have been fraudulently availed the input tax credit, you pay off to department with the interest penalties, then the department will be revoke the restriction. Once is imposed, restriction under rule number 86 capital A is a maximum period of 1 year, it will be valid. Now, such a disallowance of input tax credit or restriction of input tax credit is now spreaded. The authority has been delegated to the various levels of offices. Up to 1 crore of amount of ineligible input tax credit fraudulently availed, up to 1 crore, then the authority to impose restriction by Deputy Commissioner of Central Tax or Assistant Commissioner of Central Tax. If more than 1 crore of misuse of input tax credit, not exceeding 5 crores, Additional Commissioner or Deputy Commissioner, Additional Commissioner or Joint Commissioner is empowered to impose the restriction under rule number 86A. More than 5 crores of input tax credit has been fraudulently availed, the restriction will be imposed by the Principal Commissioner or Commissioner. That means hierarchy has been given. Assistant Commissioner, Deputy Commissioner, AC or DC up to 1 crore. More than 1 crore up to 5 crores. JC or Additional Commissioner. More than 5 crores of input tax credit, the restriction can be imposed by the Commissioner or the Principal Commissioner. Bring into a notice rule number 86 capital B, also very important. Restriction on the amount while going to utilize through electronic credit ledger, meaning thereby the taxpayer whose taxable supply other than exempted supply and other than zero rated supply exceeds 50 lakhs in a month, for him this particular restriction under rule number 86B is imposed. What do you mean this? Sir, I am regular taxpayer under normal scheme under the GST. My turnover is 50 lakhs, more than 50 lakhs previous months. Very good. Per month more than 50 lakhs. April month 70 lakhs. February month 80 lakhs. Up to August month. Each month my turnover, taxable turnover, other than exempted turnover, other than zero rated supply, is more than 50 lakhs per month. Then for me, my full amount of input tax credit not allowed to utilize. Minimum 1% of my output tax liability I have to pay through electronic cash ledger. Through electronic cash ledger. How should understand this? Here one example itself given straight away in our material is available. The total value of interstate supply of Shiva and Sons for the month of March 2021 is 100 lakh. Said supply is taxable 18% of GST. The total output tax liability of Shiva is 18 lakhs, obviously. Amount available in electronic credit is 20 lakhs. My liability to pay 18 lakhs, my credit is 20 lakhs. My credit is more than my liability. In that case, for me, restricted credit rule number 86 capital B says that, hey Mr. Shiva and Sons, you can eligible to avail the input tax credit only 99% of your output tax liability. 99% of output tax liability. 18 lakhs output tax liability. 99%, 17 lakhs 82,000 is my output tax liability. 99% can be used from input tax credit. That means I have input tax credit 20 lakhs, but 20 lakhs I can utilize for payment of 18 lakhs. 18 lakhs minus 99% of 18 lakhs, 17 lakh 82 only can be utilized from my input tax credit of 20 lakhs. And I have to pay minimum 1% of output tax liability, namely 18 lakhs, on which 1%, 18,000, I should pay through electronic cash ledger. Though I have more excess credit than the liability, I am not allowed to use fully. Is called the rule number 86 capital B. Got the clarity, my dear friends? It is applicable only to the taxpayers whose turnover, taxable turnover per month is more than 50 lakhs. For them, this restriction is applicable. However, this restriction is not applicable for the following taxpayers. That is very important. One can expect in the examination. Have you understood the restriction point? Yes or no? This point, rule number 86 capital B. Rule 86 capital B. Understood? You want to give one more example? Understood. Very good. In that case, very good. This restriction is not applicable for the following taxpayers. If you are a taxpayer being a proprietor, karta, or managing director, partner, whole-time director, member of the managing committee or of association or board of trustees, if so, taxpayer, proprietor, karta, managing director, partner, whole-time director, member of the managing committee, like that assessee having paid income tax exceeds 1 lakh in each two preceding financial years, 23-24, more than 1 lakh income tax paid, 24-25, more than 1 lakh income tax paid. In the year 25-26, this restriction, rule number 86 capital B, not applicable. Entire amount of input tax can be claimed and the excess credit can be carried forward. That is payment to electronic cash is nil, allowed. Point number B, where the taxpayers have received a refund of unutilized input tax credit exceeding rupees 1 lakh in the preceding financial year on account of export or supplies to special economic zone. In that case, for such taxpayers, this restriction rule number 86 capital B not applicable. Point number C, where the taxpayer have received a refund of unutilized input tax credit exceeding 1 lakh in the preceding financial year on account of inverted duty structure. Inverted duty structure means what? My inward supply 12% GST rate, I manufacture and produce the output which attract 28% GST. That is not inverted tax because my inward supply is lesser than the outward supply. If so, not inverted tax. Then what is inverted tax? My inward supply 28% GST, after manufacture I am selling it at a 12% GST. So my inward supply 28% GST, my outward supply just 12% GST. For example, in that case, resultantly I have excess credit in my books that I ask for refund under the inverted duty structure under section 54 of the CGST, well allowed refund. In that case, if I claim the refund previous year more than 1 lakh rupee For me, this restriction rule number 86 will be not applicable, meaning thereby enter input tax credit I can avail while paying my output tax liability, not required to pay minimum 1% of on output tax liability through electronic cash ledger. Such a condition not applicable for me. Further, the taxpayer has discharged his tax liability towards output tax through electronic cash ledger on account for an amount which is more than 1% of the total output liability applied cumulatively up to the said month in the current financial year, then for me not applicable. What is this 1% paid to electronic cash ledger cumulatively more than 1%? How to understand this? I will present this with the help of example. You will appreciate this example. Listen here. Here, Mrs. X Limited, for whom rule number 86 capital B applicable with effect from, for example, April 2024 applicable. Rule number 86 capital B is applicable. Very good. In that case, April 2024 tax, total tax in rupees 2 lakhs. Here, input tax credit in rupees 1,98,000 paid electronic cash ledger. Paid electronic cash ledger. Look here. How much paid? 2,000 paid. So what is the percentage paid through electronic cash ledger in the given case? I want the percentage. Quickly can you tell, my dear friends? By the time I am writing, quickly tell what percentage I paid. 2,000 divided by 2 lakhs. 2,000. 1%. 1%. Okay. May month liability 3,50,000. My input tax credit 3,49,500. Electronic cash ledger I paid only 500. What percentage I paid? 500 divided by 3,50,000. Electronic cash ledger paid 500 by 3,50,000. 0.14%. So by the end of the May month, I paid 1.14 cumulative amount. That means coming to June month 2024, I have my liability 5 lakhs. I have my input tax credit 6 lakhs. Can I avail entire input tax credit? The point comes here. Rule number 86 capital B is applicable with effect from 1st April. So 1st April we applied, 1st May month applied. That means here we pay the tax because we won't have credit more than liability. So we pay the cash. What percent we paid up to the end of the May? 1.14%. More than 1%. Since more than 1% cumulatively so far we paid, rule number 86 capital B is not applicable. Resultantly, I paid to electronic cash ledger nil. Reason, I have excess credit, excess ITC of rupees 1 lakh carry forward. That means rule number 86 capital B is not applicable with effect from 1st June. With effect from 1st June 2024. Reason, since cumulatively tax paid by electronic cash ledger more than 1% up to 31st May 2024. Therefore, from June month onwards, this particular restriction is not applicable to me. That is what this particular point says. Again, I am reading that point number D. The taxpayer has discharged his tax liability towards output tax through the electronic cash ledger for an amount which is more than how much I said 1% of the total output tax liability applied cumulatively up to the said month in the current financial year. In that case, from the next month onwards, input tax credit is fully allowed to avail, not to apply restriction rule number 86 capital B. And furthermore, this restriction rule number 86 capital B not applicable for the taxpayer who going to pay the tax being a government department, public sector undertaking, local authority, a statutory body. If so, for them, this restriction rule number 86 capital B not applicable. At the same time, the Commission of Central Tax, the Principal Commission of Central Tax can able to decide a person not required to be apply rule number 86 capital B. That means is a discretion power of the department also brings relaxation from rule number 86 capital B. Got the clarity, my dear friends? Further referring to you the points. Now coming to section 17 series of input tax credit under CGST Act 2017. Sir, entire story I will present in a simplified manner to say that if I have a common input goods. What do you mean by input goods? Section 2 subsection 59 defines the term input goods, which means other than capital goods. Section 2 subsection 60 defines the term input service, means the service used by the supplier for providing taxable output or output supply of goods or services. A person, he received input services to use for taxable output or exempt output, goods or services or both. So input service means the service received for providing supplies. What do you mean by capital goods? Already referred. Section 2 subsection 19, capital goods means the value of which is capitalized in the books of accounts of the person who is utilizing the input tax credit and using the asset in the course or furtherance of business is called as capital asset, capital goods. Now the point here is section 17 subsection 2 specifically says that if you use the input supplies partly for taxable, partly for exempted, proportionate reversal. Section 17 subsection 3 also refers if you use the taxable supplies as well as exempt supplies, your inward supply, which will become a common credit. Now the point here is very clearly says 17.1 says the amount of input tax credit shall be restricted to so much of the tax input tax as attributable for the purposes of his business. The amount of credit shall be restricted to so much of the amount input tax credit is attributable to the purpose of business. For example, I have purchased 1000 units by paying GST, let us say 12,000. For 1000 units, 12,000. 500 units I use in business purpose, balance 500 I use for my non-business purpose. Then the input tax credit allowed only for 500 units used for business purpose, says section 17.1. 17.2 says that the amount of credit shall be restricted to so much of the input tax credit as is attributable to the said taxable supplies, including zero supply. Meaning what? Sir, I purchased 1000 units by paying 12,000 rupees of GST. On that 500 units I manufactured and sold in India, and 500 units manufactured and sold outside India. If a good sold outside India, what is the value of a supply? It is called zero supply. Now, for your kind consideration, taxable supply includes zero rated supply. For a kind consideration, taxable supply includes zero supply. Then how much input tax credit allowed for me? Entire credit is allowed, because out of 1000 units, 500 units I use and for manufacture of taxable goods selling in India, balance 500 units I am manufacturing, exporting outside India. In that case, taxable turnover includes zero rated supply, namely exports. So how much credit I can avail on 1000 units where I paid the GST 12,000? Entire 12,000 is allowed, says section 17.2. Then coming to 17.3, which says that, hey Mr. Taxpayer, if you purchase the 1000 units by paying the GST 12,000, that 1000 units used in the manufacture of taxable as well as exempted. Taxable as well as exempted if you supply, then you are eligible to avail the input tax credit proportionately as referred under rule number 42 in case of input services. In case of capital goods, which is commonly used for taxable as well as exempt output supply, you are allowed to avail the input tax credit proportionately on such capital goods by referring the rule number 43 of the CGST. Got the clarity, my dear friends? You should be catch hold by giving the attention, by listening with a greater concentration. Now in the given case, I am presenting by saying that proportionate reversal. Rule number 42 says common credit on input services multiplied by exempted turnover divided by total turnover. Generally, when you refer this turnover here mentioned, the aggregate turnover mentioned here, the aggregate turnover, supplies of the total turnover shall excludes the amount of any duty or tax levied under section under entry number 84 of the Union list 1 of the 7th schedule. Likewise, central excise duties, entry number 51, 54 of the list 2 of the Union list, as the case may be. That means what? Turnover should not include central excise duty, value added tax, CST is the meaning of it. Further, when you say turnover, hey Mr. Supplier, what is the turnover for the tax period? For the tax period turnover, sir, for the month of September, I produce the following manner, bringing to notice. Example, numeric example brings more clarity. One example I am bringing with regard to section 17, subsection 3, read with rule number 42 of the CGST rules, where common inputs, how to understand common inputs? Raw material value 1 lakh, GST 12%, 12,000. So this has been used to manufacture. Thereafter, I too received some input service, value, let us say 2 lakhs, GST 18%, let us say 36,000 is input service. What we did here is we used both this and this used in manufacture of, for example, finished goods. These finished goods, there are two types for a particular X Limited. For example, X Limited for the month of September 2024. September 2024 raw material purchase. Raw material also September 2024. Input service also September 2024. That should be mentioned very clearly. September 24. That is 2024. So September month production. Here taxable. Here exempted. Taxable value here 5 lakhs. Exempt supply here 3 lakhs. Now here taxable supply attract, for example, IGST 18%, which is 90,000. Here GST is nil rate. GST here is nil rate. That means to say that in the given case, my dear sir, GST is nil rate. Now, like this, simultaneously produce finished goods as well as finished goods consist of taxable as well as exempted. Now, we got common credit here. What is a common credit here? Common ITC is nothing but this particular rupees 12,000 and 36,000 plus 36,000. Total how much is equal to? Is nothing but a 48 na? Yes. So is a 48,000. 48,000 is your common input tax credit on input services. If so, when I am going to pay the tax, when I am going to pay tax on my output supply, I am going to pay the tax now on my output supply. What is my output supply? Which is taxable 5 lakhs. So on which GST is almost all here given 90,000. So as per my GSTR 1, output tax liability, output tax, how much comes here? 90,000. Then I should also have to have the proportionate reversal. Proportionate reversal of input tax, also my output tax liability. How much means? Please take the calculator and tell me, my dear friends. I am applying the rule number 42. Rule number 42 formula. Common credit, how much? 48,000 multiplied by input tax credit. Input tax credit, common credit multiplied by exempted turnover. What is the exempted turnover you have understood here? Which is 3 lakh rupees. So 3 lakh turnover for the given month divided by total turnover for the given month 5 lakhs plus 3 lakhs equal to 8 lakhs. How much is the common credit attributable to exempted supply, which is output tax liability for me? Quickly tell me. 3 by 8 into 48,000. How much? 18,000. 18,000. Good. That is my output tax liability. Then total tax liability as per the GSTR 1 is 1,08,000 is my liability as per the GSTR 1. Coming to filing the GSTR 3B return, I have to pay the tax. I have to go with the GSTR 3B. GSTR 3B. As per the GSTR 3B, my output tax liability, output tax as per the GSTR 1 auto populated 1,08,000 less my input tax credit as per GSTR 2B, which is how much? 48,000. Because from 48,000, 18,000 ITC not allowed, therefore we added to output tax liability, therefore claiming the entire amount of input tax credit. So net amount, how much I have the input tax credit? Only the input tax credit, common credit attributable to taxable supply, namely 30,000 only I am claiming the credit, but issue in this following manner. Then the balance here is 60,000. 60,000 paid through electronic cash ledger. It is a liability. I will say that instead of that, I will say that liability. GST liability to pay. I will pay it by bringing the amount into GST 3B electronic cash ledger. So electronic cash ledger. how much is their amount, means that amount should bring by debiting my bank account with the help of GST, PMT, 06 is a challan, payment challan, which is going to debit my bank account and credit to electronic cash ledger. How much? 60,000. Then GST 3B should be submit. When I submit, system shows your cash ledger is going to set off with the liability. Is it okay for you? Warning will come on network portal. Yes, okay. Then it will get set off, that liability become nil. So GSTR 3B submitted, then only paid the amount to department. That means to say that, hey Mr. Taxpayer, simply debiting your bank account, bringing the amount in the electronic cash ledger does not mean that you paid the tax unless you submit the GST 3B by knocking off your electronic cash ledger with your liability. Is it clear, my dear friends? Any difficulty to make you understand the subject? This is what?
Please repeat the example.
Simple, my dear. Unnumillema. What is it is? Proportionate reversal. When proportionate reversal comes into picture? Only when there is common inputs, input services. If so, rule number 42 says that under section 17 subsection 3, proportionate reversal of credit, the common input tax credit attributable to exempted supply, ITC not allowed, says section 17.3. How to apply the formula? Refer the rule number 42. Formula rule number 42 says that common credit on input goods, input services multiply with exempted turnover divided by total turnover. What is the exempted turnover for the September month? 3 lakhs. Taxable turnover for the September month, 5 lakhs. Total turnover for the September month, 8 lakhs. The goods received to manufacture this product, raw material by paying GST 12,000, input service by paying the tax 36,000. Like that, input goods, input services received to produce taxable as well as exempted. Then rule number 42 says that entire 40,000 common credit not applicable because that amount belongs to exempted turnover of 3 lakhs. Therefore, how much it is means 48,000 multiplied by exempted turnover divided by total turnover. Therefore, we got 18,000. This 18,000 is nothing but the credit attributable to exempt supply, which is not allowed. Therefore, what I did here is, when I am going to sell my goods at rupees 5 lakhs, output tax liability 90,000, add proportion reversal of input tax credit, common credit attributable to exempted supply 18,000. So total liability 1,08,000, which is as per GST 1 return. I submitted. I have to pay the same. When I am paying to pay same GST 3B, I have to submit. So my output as liability 1,08,000 is auto populated from GST 1 to GST 3B. Of course, my GST 2B, when I confirm my return, my input tax credit GST 2B, in that part 1 confirm credit allowed as per the section 16 section 2 class BA. I availing entire rupees 48,000, but out of 48,000, 18,000 I take it as my output as liability. Therefore, net how much I am availing? Only the 30,000 credit availing. That means 90,000 liability minus 30,000 input tax credit is equal to liability only 60,000 to pay electronic cash. The same I presented with the help of practical aspects. Since I am dealing with the professional students like chartered accountants, cost accountants, I should be professional while presenting, not as an accountant. I should be a professional accountant to deal with the professional accountants. That's why I invited GST 1, GST 3B, along with the GST 2B in between. Now got the clarity?
Yes, sir.
Yes, thank you, my dear friends. And further moving on to, sir, when we talk about turnover, exempted turnover, we have a clear-cut information. The following should be includes in the exempted turnover. The following should be exclude. What is to be include when you refer outward supplies on which recipient is liable to pay tax under RCM is my outward supply, my supply only. It includes. That means I am supplying loudly.
Screen not shown.
Screen not sharing, huh? Why not
Yes, sir.
sharing? Why not sharing screening? Let's check it out. Is it there? In my side very clearly. Screen not sharing. Why not sharing? Again, you ask for request, otherwise I open for all. Okay? Screen is available. Recheck, refresh your system. So supply includes, exempted supply includes my supplies on which recipient liable to pay GST, which is exempted in my hands. Add it. Transactions in securities, which is neither goods nor service. But if there is a transaction in securities, 1% of the sale value is considered as exempted supply only for the purpose of rule number 42, exempted turnover for formula purpose only. 1% on the sale value of the securities is exempted turnover. Sale of land, sale of building, in the given case, it is neither goods nor services. In spite of that, sale of land, sale of building, whose value as per the stamp duty purpose. What's the value? That value is the value of exempted supply. Nil rate of supply, non-taxable supply will be called as exempted supplies for the formula rule number 42 or 43 to proportionate input tax rate on common input goods, input services and capital goods respectively. Then what is should not be included in the exempt supply means schedule 3 transactions should not include except sale of land and building, which is covering under the inclusion point here. Further, we should not include here, they said first of they said here except sale of land and building, we should not include schedule 3 transactions in general, but except sale of land and building, which is inclusible stamp duty value. Further, from 1st October 23's amendment, supply of warehoused goods to any person before clearance for home consumption, that is to be included in the exempted supply, though it is not attract GST, it is a schedule 3 point number 7 transaction. Supply excludes goods are warehoused. It is point number 8 transaction, sorry to say, schedule 3 point number 8 transaction, where goods are warehoused any person before clearance for home consumption. Such a warehoused goods has been supplied by any person to any person, not a supply, because supply excludes. It is schedule 3 point number 8 topic. In spite of that, that is to be included in the exempted supply, because under the exclusion, exception is inclusion. So what is to be included in the exempt supply? 1, land and building. 2, warehoused goods before clearance for home consumption supplied by any person to any person should be included in the value of exempt supply. But all other schedule 3 transaction should be excluded from the exempt supply. Further, interest and deposit loans advances should not be included in taxable supply, should be excluded from the exempt supply. Exempt supply excludes interest and should not be taken to numerator formula purpose. Exempted turnover should not include schedule 3 transaction except 2 points. Exempted turnover should exclude interest and deposit loans advances. Further, exempted supply excludes supply of services by way of transportation of goods by a vessel from the customs station of clearances in India to a place outside India. that also should not be considered in the exempt supply. Service by transportation of goods by a vessel from custom station of clearance in India to a place outside India, it is not exempted supply. In fact, it has become now taxable supply, therefore it is not an exempt supply. Excess duty, sales tax, VAT should not be considered. Any values of the foreign trade policy incentives like no MEIS, merchandise export from India scheme, RODTEP, remission of duties and taxes on exported products, SCS, service export from India scheme, EPCG, export promotion capital goods schemes. These are all the export incentives should not be considered as your exempted turnover. Remaining all exempt turnover, which is given the list here. In your material, I given the list. Exempted turnover means which includes the following. But point here is, high-level point here is 1% of the value of sale value of securities will be considered only for the purpose of formula. Rule number 5 to 43, exempted turnover includes securities transaction, 1% value is exempted turnover should be considered. Like that you do it, then easily can be able to find out formula. Common credit input goods multiply by inputs exempt sub turnover divided by total turnover for the given tax period. Means for the period for which you are going to file the return. Capital goods is considered commonly used for taxable as well as exempted supply. There is one more step you have to do it. Remaining all same formula. Rule number 43, same formula. Common credit and capital goods multiplied by exempted turnover divided by total turnover. That output proportionately attributable to exempted turnover will be output tax liability. How to understand that? Also, I am presenting here for a kind consideration in the given same example, my dear sir. I will take same example. Who is our client in the given case? Our client here is Mr. Here X Limited. X Limited is our client. Very good. September month is input goods. It is as per rule number 42. So coming to rule number 43. Rule number 43 is considered common credit on capital goods. So capital goods purchase for rupees 10 lakhs. There is a GST 28%, which is 2.8 lakh. When they purchase, invoice date 1st September 2024, for example. So from the date of invoice, the life of the capital goods you declared as 5 years, which is nothing but 60 months. For capital goods, alone I am telling you. In that case, capital goods GST is equal to how much? 2,80,000 divided by 60 months. For per month, how much comes? Quickly tell me. Per month, how much? September month I am talking about. September month. How much? For the September month. Because the life has been declared for 6 years. Sorry to say 5 years. 5 years means 5 into 12 months per year equal to 60 months. So the life of the asset declared as a 60 months, which is step 1. Step 2, proportion reversal. Tell me quickly, fast. Tell me how much comes. Hey, Mister.
4,667.
How much?
4,667.
4,667 per month. Correct? Is clear?
Yes, sir.
Very good. In that case, step 2. Take that amount 4,667 multiply by exempt turnover. In our example, exempt how much? 3 lakhs. This formula is there, no? This formula I will simply copy and paste. Exempted turnover divided by total turnover, which is 3 lakhs exempt turnover divided by 8 lakhs. Total turnover. How much comes here? That is 3 by 8. 4,667 multiplied by 3 by 8. How much comes? Quickly,
1,700.
1,750.
750. Yes, sir.
This is ITC proportionately not allowed. Then what about the GST 2,80,000? Then ITC allowed fully. ITC allowed fully in September 2024 itself allowed, full allowed. Entire amount is allowed. But every month over a period of 60 years, sorry to say, over a period of 5 years from the date of invoice, means over a period of 60 months, you have to be apply. This amount will be constant every month, 4,067 multiplied by exempted turnover for that month, October month turnover, exempt amount divided by total turnover, like that November month. So that proportionate amount attributable to exempt supply will be going on. You take as output tax liability. Proportionate ITC, proportionately not allowed, this ITC. That means it is nothing but what? Output tax for the month of September. Like that, output tax for the month of October will come over a period of 60 months from the date of invoice. Step 1, declare the life as 5 years equal to 60 months. Count reckon from the date of invoice over a period of 60 months. You bifurcate that amount. Per month credit will come. That you multiply with the given month exempted turnover divided by total turnover. Then you will get proportionate amount attributable to exempt supply for the tax period, the period for which you are going to file the return. Then you submit that return GST 3B by taking that amount, by taking this amount as your output tax liability. Then 2,80,000 you can avail fully input tax, no problem. Is the way in which section 17 subsection 3 read with rule number 42 input goods, input services, read with rule number 43 capital goods, where these are used commonly for taxable as well as exempt supply. You apply like this. Got the clarity, my dear friends? At this point of time, I am concluding the session. The continuation will be continuous in the subsequent sessions, where I am going to take up the input tax credit not allowed, namely block credit under section 17, subsection 5. All those points I will refer. Thank you, my dear friends.